Morning, everybody. Welcome to my channel. 8:10 a.m. December 16th. We had a little wild overnight session here. Pushed down a decent amount, almost 35 points from yesterday's lows, but now we're back inside the range. That is very interesting prior to these data-filled day. Very interesting, right? Yesterday, we pushed lower from the open, and technology was relatively weak. Okay. But the overall market wasn't really that weak. And the overall market not being that weak held back the market from selling off. Okay, because any little rally that was happening, tech just couldn't get out of its way. If tech started to catch a bid, this market would have ripped back up. Okay, that's only because the market cap weight of technology. So yesterday's a good example of wow, tech's weak, but the overall market wasn't that weak. Now in the overnight, market sold off. But now that you're back inside the range of today, I'm not gonna lie. I'm not gonna lie. This could be the swing low here. The overnight lows for Santa Claus. I mean, obviously, I gotta let the market play out, but that is a pretty nice sell-off and recovery. A weaker market. We're at the lows and the overnight lows right now. Okay, we're gonna get into a bunch of technical analysis now. 8:30 a.m. We have non-farm payrolls and unemployment. Right? We got that today. Later on at 9:45 we have PMIs. It's a slew of data. Now the only thing that I could think is Japan, the Nikkei was down 1%, basically on artificial intelligence getting sold off AI. Unless I read something else, because Broadcom got slaughtered yesterday. Slaughtered, so Oracle dropped even more. Right? Apple sold off pretty good. Amazon, Microsoft sold off. Just looking around here. Yeah, tech had not the best day yesterday. Now, the farther we sell off, I feel that there's a discount there. Doesn't mean discount forever. It means a discount for a possible rally. Now, last year, we did not have a Santa Claus rally. I believe we had a negative December last year. But generally, you do. Right? Who knows what's going to happen in 2026? I'm not talking about the year of 2026. Okay? But the fact that the ES is back in yesterday's range, the NASDAQ is right at yesterday's lows, NASDAQ futures. Right? So this unemployment data should give us a little scope into the labor market. If it's deteriorating, we know we're going to get cuts. If it surprises and you're like, whoa, did it move or something, that might get the Fed to pause. And then we know we're getting a different Fed as well coming up. Lot of stuff going on. Yesterday, if you're in my Discord, I did go long. And that position I was in for almost the whole day. And you could see the market chopped. When I got into my position, documents. When I got into that position, it took off, and I was like, okay, tech's recovering. and then you had a big like reversal bar, and I was like, oh boy. And then it just chopped and chopped. It would come up, it would go back down. It went back up. In my Top Step account, I literally was in that all day, and at the end of the day, I think I lost $80 on that one trade. The reason why I took that is because we had a sweep of liquidity, and that the Microsoft, Apple, and Nvidia were all at key levels, and the overall market was not weak. And then initially the trade looked awesome, but then tech just couldn't get out of its own way, specifically Broadcom. Okay, so I mean, basically like a scrape, barely a loss at all, but that was a lot to sit in because you saw we chopped. We didn't go anywhere. Okay. Now, like I said, we're going to get into a slew of data today because we have 8:30 big time NFPs and unemployments. Okay. So let's get into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile and buying profile to find structure in the markets. Long supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. It's the way I look at the markets, the market structure. Also use Anchor VWAPs, market internals, bookmap, and my trusty weekly expected move indicator that you can get on for free on my Discord. Okay. Every morning I do this to give you the market story, the news, the economic calendar, the leaders and the laggards. All right. Give you a bunch of technical analysis, and then I follow it up with the long and short trade scenarios of the Nasdaq and the ES futures. All right. If you want more in-depth coverage, you're gonna join my Discord as Confluence Trading. Go to the YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Also, you sign up, you get that free expected move indicator for each week. That gives you the expected range of the high and the low side for many important tickers. The edge in that is 70% of the time, every stock closes within inside that range. So if a stock is pushing to the upside, generally you can say that it's probably seen the majority of the move to the upside. Downside, same thing, probably seen the majority of the move to the downside. If it crushes that level, keeps going, then that is market generated information that the stock can keep going. But if it meanders up to that and kind of holds there, generally it doesn't go much higher. So that's the edge in that. Okay. Now let's go move on to futures watch list here. Now Bitcoin yesterday dropped, I want to say below almost 80. So the VIX is up 2.36%. Bitcoin's up 1.72. It's at 87. It can't get above 94, 93. That's probably why tech also was down. I was watching that and I'm like, Bitcoin and Nasdaq usually are cousins there. They usually do the same thing. People taking money out of Bitcoin, probably people taking money out of tech. So Ethereum up 0.68, 30-year bonds are being bought up 0.19. Dow flat, ES down 0.16, Russell down 0.18. The dollar is down 0.24. 10-year yield is down 0.26. Gold is down 0.27. Nasdaq's down 0.27. The silver is down 0.88. Silver keeps pushing. All right, crude with peace talks with Ukraine and Russia has been falling even more. Now I rolled my contract over on crude, but $55 a barrel. Notice your gas, especially in Jersey here, gas is at $2 and something. I know New York is a lot more expensive, but gas in New Jersey is always cheaper. But basically how crude goes, you see it in the gas prices. Okay. What happens with that? I don't know. Crude's just in a range, and it's just can't get out of its own way. Okay, I think eventually that's going to be a nice long, but I don't, do I know when though? Okay, moving on to the Mag 7 Plus here. Coinbase, that's your Bitcoin proxy, almost up 1%. Eli Lilly up 0.64. Let's go to the little bit of a laggards here. Apple down 0.31, Meta's down 0.39, Broadcom still down 0.5%. That got slaughtered yesterday. AMD down 0.61. Tesla down 0.71. All right, moving on. Top sectors. We got Disney up a 0.5%, followed by Uber up 0.29. A little bit over the 0.5%ers here. You got Exxon down 0.53, Chevron down 0.55. That's with the crude's weakness. United Healthcare down 0.62. Salesforce down 6.64. Miners down 0.69. Palantir down 0.85. Let's go to the granular here. Who's up in the granular list here? That's Transmedics. No, I'm sorry. That's Tandem Diabetes. I think that's Tandem Diabetes, I'm pretty sure. Up 4.52. Roku up 3.65. Accenture up 2.67. I believe they got an upgrade. MicroStrategy's finally up 2%. That thing has gotten destroyed. All right, let's go to the laggards here. Tilray, probably some profit taking in the marijuana, the cannabis stocks. Humana down 3.55. Healthcare. ADP down 1.28. There you go for that list. All right, that list. Now we're going to move over sectors. That's where my market internals are derived from every day. Healthcare is up 0.13. Financials up 0.07. Now let's go down to laggards. There really is not one until you get to energy. All right. Remember, about 9 minutes we get the unemployment data. All right. We're going to move over to that economic calendar now. All right. Slew of data today. Tomorrow we have CPI. So 8:30 non-farm payrolls. Unemployment. What are we expecting? 4.4. We're expecting it to stay the same. 4.4 last time unemployment. Non-farm payrolls. I don't know why there's 2 here. That's an error probably. Oh, wait a minute. Are we getting 2 different non-farm payrolls here? I think we are. Because it says October and November. Interesting. We're expecting 50K jobs added. Interesting. All right. We're also getting retail sales. PMI at 9:45. Business inventories at 10 a.m. Okay. That's what we're getting today. With a lot of data. So 8:30, let's see what happens. Really, let's see what happens. Okay. Let's look at Trump and the juice here. Interesting here. The juice has it of an unemployment raise, the forecast. The other one has it to say the same. So interesting there. So 50K. We're expecting to add 50K. I don't know what the hell that is. 10 a.m. unusual activity live webinar. Maybe that's for financial juice, I'm thinking. 2 o'clock Trump at ceremony. All right. Let me see here if there's any red here because Japan dropped 1%. So I can only think that's the reason why we dropped. Let's go into some stock news here. Ford stock rose 1.4 after the auto giant said it will take 19.5 billion write down and killing several electric vehicle models in a retreat from battery powered models. Pfizer stock rose 0.8 despite the drug giant forecasting 2026 profit below expectations. Kraft Heinz stock gains 0.7 after packaged food giant announced industry veteran Steve Cahillane as its new CEO. Circle stock rose 2.5 after Visa announced the launch of USDC settlement in the United States, marking a significant advancement for stablecoin integration. iRobot, well, I already know this, they went bankrupt. Stock slumped 20% after adding to the previous session. 67% slump after the Roomba vacuum cleaner marker filed for bankruptcy. Accenture stock rose 2.1 after Morgan Stanley upgraded. Southwest Airlines gained 2.1 after Barclays upgraded it. All right, there's some upgrades there for you. Let's see here. Delayed U.S. employment. Look what it says here. Delayed U.S. employment reports expected to show softening labor market. U.S. job growth likely rebounded in November, following anticipated decline in non-farm payrolls in October because of federal government cost cutting, economists predicted. Let's see here. Oh yeah, I saw this too yesterday. This is gonna get crazy. The Nasdaq exchange seeks to extend trading hours as Wall Street gears up for 24/7 move. Nasdaq, one of the world's largest exchanges that is home to tech companies Nvidia, Apple, and Amazon, is planning to submit paperwork for the U.S. Securities and Exchange Commission on Monday to roll out round-the-clock trading of stocks as it looks to capitalize on global demand for U.S. equities. That is crazy. That is crazy. I wonder if options will probably stay the same, but that is pretty crazy. All right. Let's see here. U.S. overdraft fees jump at big banks. Let's get into what I think possibly is why we went down overnight. Let's see. Stock index futures slipped as caution set ahead of highly anticipated non-farm payrolls report that could offer insight into the health of the economy and the potential path for interest rates next year. Also on tap are delayed retail sales figures for October, along with initial estimate of business activity for the month of S&P Global. All right, here we go. This is where I think things could have happened. China and Hong Kong stocks, meanwhile, extended declines amid broad-based weakness. Joining the slide across the Asia region, Japan's Nikkei dropped more than 1%, weighed down by losses in the chip makers and other artificial intelligence linked stocks. I believe that's why we went down. Okay. And then it says, oil fell below $60 a barrel, the lowest since May, on expectations that the process of Russia-Ukraine peace deal may be improving, potentially paving the way for an easing of sanctions. All right. Remember, I always tell you the reasons. All right. I always try to figure that out. Let's see. Intel, the company on Monday appointed an economic advisor to U.S. President Trump as its head of government affairs months after the U.S. government took a 10% stake in a U.S. chip maker. All right. All right. We got 3 minutes to this data come out. Let's, you know what? I think we can go right. I'm going to do a little market internals recap. All right. Let's do a little market internals recap just to show you what I saw yesterday. All right. Notice tech down almost 1.5% from the open. All these were pink, which means it's under negative 50. Okay. Deep red is over 0.5%. So, but I want to point out a couple things. Okay. Look at the market cap bars, right? They're all negative, right? But I know whenever I see 1-to-1 ratios, even if they're negative, that's not that bearish. Now you had a 2-to-1 in the Nasdaq, makes sense, technology, right? But look at the NYSE ADD. That's in the middle, folks. That's out of, like, let's just say 2,500 stocks. That means that 1,250 were above above the previous day's close and below. Nasdaq a little redder, but that you want to see negative 2,000 is cause for caution. Look at the S&P 500. 76 stocks were advancing. Now this is close to zero, so that means that the market was half and half. Even the Nasdaq 100 ended the day with 5 stocks advancing minus declining. Overall, the market was not going to fall out of bed. That's why I entered a trade. And I got this move. I was like, here we go. And you had weak structure above, but then tech couldn't get out of its way. It just couldn't, right? Even at this point, equal weight got all the way up to zero, and I'm like, okay, here we go. That's why I was watching it, trailing my stop, and I just was like, all right. I took it off in my Top Step account around somewhere around here. That's why I said I only lost like $80. Okay. Glad I didn't hold my personal account as a swing position because that would have got taken a loss. Okay. All right. That is coming out. I'm going to go to the hourly charts here. And we're going to see how this data affects those hourly charts. Okay. Here's your ES. And this is your hourlies here. That is coming out in 10 seconds. Let's just see what this brings us. Does it affect the markets? Does it not? I don't know. Boom. That is out. That is out. Oh boy. This market might go up. All right, let's look at the data. Unemployment went up to 4.6. Unemployment went up to 4.6. So our labor market is definitely weakening. Okay? Definitely weakening. That is going to boost our markets. Okay? Because that just means, okay, the Fed's probably going to cut again. Now, non-farm payrolls actually had a positive number. We expected 50K, which is not a lot. We got 64K. So that beat. But that's not strong. Okay? Whoa. Okay, so look at October. Now, I don't know. This was expecting the previous 119. It got a negative 105. That's deterioration, right? November had added 64, but this is positive, folks. For the market, look, you're getting a nice green bar here. Yep. This is expected. Unemployment deteriorating is going to be positive for markets, more cuts. I almost thought about getting long in here when I saw this morning. Okay, but I didn't know what the numbers would be. Right, so I was like, that's not really worth it. Okay, but this right now, all's got to break is this swing high here. Go back into last week's range, and I think, folks, we're gonna at least tap this if this gets continued momentum. Okay, so now we know those are the big numbers. Retail sales came out as well. I don't think the market really. The big numbers is the non-farm payrolls, unemployment, but that unemployment jumping up point 2, that's showing our labor markets getting it's not going too good. Okay. Any next Fed meeting, when they see those numbers, they're gonna look at that and go, okay, we need to cut again. Okay. That's that big green bar. All right. Now I'm gonna let that settle down, and we're gonna get into daily charts. This is a key resistance area, right? You can see now I changed my charts now to this chart to be like 65 days. So this is just in the last like figure 2 months, the most traded price. Right? Right there. In the last 2 months. So this is a little bit of a sweep here of these two lows. Okay? People probably taking profits there. There was a supply zone there. Okay? Well, and like I said, let's let this marinate a little bit so I can give you guys my analysis on it. All right? We'll go back to the hourly charts. Okay? And we'll just look at the we will look at the daily charts. Okay? And we'll just see where this market is, certain levels. Okay. All right, so let's see here. Let's see. Like I said, we're at a crucial little swing high in futures. We'll see where that brings us. Like I said, I'm gonna let that marinate a little bit. I'm not just gonna start analyzing it now. And remember, it's contract rollover week. There's squirrely price action. I noticed it a little bit yesterday. So remember, because futures are rolling over. Remember, it's quad witching this Friday. So some people call it triple, but there is a quad. Index options, that's number one. Number two, futures options. Remember, futures has options changed. That's number two. Number three, futures rollover. That's the stream you trade in futures. That rolls over to March. And number four is stocks. So that's the quad witching. Okay. A lot of money. I think they said it's a record amount of money is going to come off the table this Friday. All right. So looking at the daily charts, I don't know if I put this up yet. Let's just do it. Let that, like I said, we're getting a little wick here. Let that marinate. All right. Tech's been weak, and I'm going to explain. We're going to get into the technology sector as well to explain possibly what might happen there. Okay. So let's look at this SPY. Right. So pretty nice size candles here. Right. Pretty nice. And what did we do? We opened up right at last month's lows. Highs, I'm sorry, highs. Last month's highs. This is last month's highs. We opened up and we drove lower. Okay. And then what did we do? Hit last week's lows and bounced and closed here. Look to the left. It's a pretty big resistance level, right? That's also why I was like, okay, maybe I can get along here and maybe I can hold this to a swing, but probably not because of the non-farm payrolls. That's why it was like, why do I swing something in front of non-farm payrolls? We have CPI tomorrow. So otherwise, I'm still going to wait. Okay, we're getting a pretty nice wick now. See, I'm letting that marinate here. All right. So where are we now? 681. Where are we now? 681.20. Right about here. See, so the lower end of yesterday's range. Right. This doesn't show that we came all the way, but that's why we go to the futures. Let's go to those futures. You're going to see we hit some key levels here. This is where there's a sweep that happened here. Okay. Sweep of liquidity. Look at this hammer candle right now. So we took out these previous two lows, right? And we came in and broke the 50-day moving average and the 20-day simple moving average. And now you got positive news. Negative news is positive that unemployment has risen. And you got this hammer. Okay? We're back inside the range. Now you have CPI tomorrow. So this could be a possible long here now. Look at the overall chart here. You're setting up for that, like I've been talking about, that inverse head and shoulders pattern still holding true. You got your neckline here. Kind of got a left ugly shoulder, a right, and a head. That this could be the discount that I was talking about. Okay? Don't know. But that's a pretty nice sweep of liquidity there, and now you're back inside the range. CPI hasn't been that impactful the last couple times. All right? So that's your ES and SPY. Let's go to the Qs because Qs have been relatively weak. All right, so Qs. Let's get into it now. Yesterday, what did we do? All right, we opened here, right? Kind of at this candle's lows, right at the 90 MA daily, and then we drove, right? And this was where I was like, do I wanna? And that's why I wanted to get long on the ES, right? This 50-day, 20-day, we broke it again. See, we closed above it on Friday. We were playing with it, and then we broke it, and we kind of stayed below it. But here's last week's lows right there. We closed below it, so pretty bearish close, right? Pretty bearish close. Where are we now? 609.50. 609.50. We are right at yesterday's lows. We're holding on here. Right at the bottom of this wick. We're holding right there. That is not bullish, but knowing what we did in the overnight, right? That's important. Let's go to that future chart. Okay? Remember, we're in the next contract. There's more volume now in this contract. Now, I did notice in Top Step, I don't have the ability, like I do in Ninja Trader, to go to the next contract for some reason. I guess they're keeping the Z contract. But in Ninja, I'm all way over to this contract. There's more volume in this contract. Okay. Now look what we did. We did a nice sweep too. Only thing here, there's not really something that I'm like, oh, we really swept. We just kind of swept these 2 days. Okay. I would say bullish would be back into last week's range. Now we're way below 50, way below the 20, but that's a nice wick. That is a nice wick. You almost hit the 100-day moving average. Almost hit that 100-day. Now, what if this becomes a swing low? We close above here. But then we got CPI tomorrow. Like I said, I don't know. Okay? I really don't know. Let's check out that breath. Market's breath. Is it stinking or what? And this is where I'm going to have proof to you guys about the overall market. Okay? This is my proof. Look what we did yesterday. It improved. It improved to 60%. It was here. That's what I'm talking about. So that's a simple thing to put on your charts. You could put this ticker on your chart. Okay? This is the percentage of stocks in the S&P 500 that are above the 50-day moving average. We are at 60%. That's where we closed yesterday. We were down the other day at 57. See what I'm saying? The overall market was not bearish. When you get the big moves, now you can get a temporary move lower in the market from the tech being weak. You can get it temporary. It could really sell off, but then it will catch a bottom if the overall market doesn't catch up. But when you get the big selling is when everything is red. Like everything is weak. Okay? Just letting everybody know that. This is proof positive right here. And you can even look at RSP. That's the equal weighted S&P. Let's see what that did yesterday. So kind of had a wick pushed up, right? But the real is the 50 percentage of stocks over the 50 days moving average. Okay, now we're getting a pretty nice wick here. Okay, now what I want to show you is this. All right, let's move into another chart here. I'm going to go over sectors. We'll do a little sector breakdown here. And I just want to show you. I brought this up a couple weeks ago. And I was like, be wary of the technology sector. Okay, I said, because what the market was doing was like balancing. But the tech market was just going up every day. And I said, and it finally hit resistance. And I remember saying this. Let's go to it right now. I remember saying this. Okay? I remember saying this. So this was your tech. Remember, this drives our markets. And it was just up, 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 up. And then I said, oh, wait a minute. It hit a resistance here. And I said, maybe we get here's the pullback. What is the technology sector doing? Lower high, lower high, lower high, lower high. Now it's in between the 50 and the 20-day. It just broke the most traded price of the rolling year, 143. So zoom out. Look at that big high volume node. Okay. Now if we continue, we can go to the 135s. So just look at that. This is why tech was just on a tear. Remember, tech got rotated got rotated back. Well, if we go above the 143 on a technology chart, I think this could be Santa Claus. But I don't know. Okay, let's look at another heavyweight, our financials. Look what financials is doing. It's having a pretty nice time here. Broke out here, most traded price of this year, boom. So that's not bearish, right? This is a good way to just go around the market. Where do we go? Number 3. Number 3 is discretionary. I think number 3 now is communications. Yeah, communications. Communications. It's just moving sideways. Okay. Then we go to discretionary. That's your Tesla, your Home Depot. Now, just to recap, this is XLY. Doesn't look bearish at all, right? Now, Technology, Apple, Microsoft, Nvidia. Okay. Financials, Goldman Sachs, Morgan Stanley, JP Morgan, Berkshire Hathaway. Those are the heavyweights. Communications, Google, Meta, Netflix. Okay. Discretionary, we're looking at now. It's been just moving up. Your Tesla, your Amazon, your Home Depot. Okay. So far, the only thing that's dropping is tech. You understand? Remember, this makes up our market. So far we got financials looking good. Tech not looking good, right? Selling off. Financials looking decent, right? Communications moving sideways. Discretionary trending higher. Let's go a little farther here. Let's go to healthcare. That's got to pull back, and now we're getting bought. So you tell me, if tech catches a bid, if people start rotating back into tech, I think Santa Claus is coming to town. Okay? Let's look at semis. Semis is inside of tech, but I like to always just look at it on its own. Here's semis. Look, up, 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 up. Hit an all-time high. Pulling back. Pull right back to the 20, to the 50. Now, this can get bought, and I think this market can rise. We'll just have to see. Okay? We'll just have to see. We'll look at one more, industrials, just for the sectors. That is also on a nice move. Look, broke this resistance, now moving sideways. So do you see what I'm saying? If technology was rising right now, this market would be at all-time highs. All you need is people to start to put money in there for Santa. Okay? For Santa. Hope that made sense to everybody. Now, let's go back to those hourlies. And look what's, woof, that's a nice wick there, boy. Remember I said, let's watch this supply and this swing high. Remember, you hit the most traded price, so kind of like the last 2 months here. Boom, what a wick. What a wick. That is a wicky, wicky wick. Turning out almost to be a doji candle for this hour. So I think people took profits here, right? Obviously took profits. That's last week's lows. That's the bottom from Asia selling off. Okay? Now, we do have a trend going lower. Here, boom, swing high. Another like swing high. Tried to break it, failed. Do we roll over? You got a lot of demand here, folks. You have a lot of demand. Makes sense that you hit the most traded price of the 2 months here, right? Interesting. That's your really good. This is ultimate balance still. Okay? So let's look at this. Let's put this into a 4-hour. We can look at like what we've been doing here. Okay? We'll just look at it. Okay? What did we do? What did we do last night? Well, there was a decent demand zone here. Right here. And we broke this little low here. Notice that there's a range here. It's like a pivot point. You notice this low volume node? That's the beauty of the market volume profile. If I follow this, this is a low volume node. That means it's a support or resistance or a pivot point. If you look, 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 oh, there we go. Beautiful pivot point. You see what I'm saying? Support, resistance, resistance, support. That's a pivot point. Okay? Now, we broke that. We're back above it. We're back above it. So this swing low becomes very pivotal. This low. Can it become a swing low? Meaning if we do this, 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 go above ultimate balance, Santa Claus is coming to town. Okay, we take this out. Now I have to be honest with you here. Take this out, you don't have good structure here. So below this low, if that gets taken out, this can there's single prints here. This can really start to roll. Really start to roll. You don't have a good demand zone to all the way down here to around 62, 67.30s. But we held it. And look at this, what we broke out of in the overnights. This big range was being held every day. Bought, bought. Boom. Overnight, we broke it. We were back in it. But this is last week's range right here. I want to see what we do there. That's your 68, 64s. Okay. Hope everybody's with me. Okay. What I'm explaining. So we got our pivot point. That's around, let's just get the levels for you guys. Pivot, and you have an unfilled gap here. Gaps don't get filled in the overnight. Okay. So 68.53 is your pivot point. Okay. That delineates that lower range and this upper range. Stay above that range, I believe it's bullish. Okay, stay that would a little above it, last week's lows. Getting a nice nasty wick here. Okay, that's your structure. So we zoom in to the 1 hour. Okay, got a bunch of demand here. So if tech today finally gets a bid, and let's say we get blessed with some kind of discount into here, there's a stacked demand zone here as long as this does not get taken out. I'm probably going to look long. Now, I'm probably going to look long if tech is stronger today. Remember, we had multiple days of tech being down. It is tricky a little bit with the NASDAQ being under the 50, but we almost bounced off the 100-day movement average in the NASDAQ, and we bounced off the 50-day in the ES. And again, all this is probabilities. I don't know, like I said, what's going to be driving the market. But if you see tech driving and we get a discount, whoop, and we do one of these and break this, ultimate balance, get over ultimate balance, that's your 69.10s. We're going to hit that equal high around 69.30s. Single prints, and we're going to be off to the races to take this out. That's going to be a nice move. Okay, now this is pretty interesting here. If we close below this candle, you just engulfed it. Okay, you just engulfed it. And that becomes more of an equal high here. That's a destination, 68.90s. So let's see. Because you had a little sweep here, this liquidity. Notice you swept it. Whoop, made a wick, closed, broke it. People call that a break structure here. And then created a demand. Now, like I said, this market is very tricky. But that's why we have the technical analysis, right? That's pretty right to the tick there, boy. People took profits. Now, like I said, right now, this is bullish news. This is profit taking. So that's what I'm going to assume. I don't know. Okay. Now, we're right at yesterday's lows. There's yesterday's lows right here. There's last week's. This could be a buy point, even if it goes through it. Let's see. Now, NASDAQ. Let's check our NASDAQ structure out. What can we see? 4 hour. Okay. Let's look at our 4 hour here. Alrighty. Now, remember, it's relatively weaker. Ultimate balance is right here. Ultimate balance is at, what am I going nuts here? Hold on. Oh, sorry. 25870s. 25877s. It's right here. That's your ultimate balance. We're way below it, folks. Okay, we're way below it. That's why these moves have been big, way from ultimate balance. Okay, away from ultimate balance. Now, what did we do in the overnights? Broke down, right? Now, we didn't really come to a specific level. You did have a high volume node from the past here, so I can't say that. You do. That's that, like this kind of like bluish box. That is a high volume, composite high volume node from the past. That held the market. Okay? That held the market. Now, that's not a surprise. That's not a surprise. Okay? So what did we do here? Do we have any levels in the long-term charts here? There's a pivot level right here. There's your low volume node. Look, if I draw a line across it, look at that beautiful pivot line. Notice it's the resistance of here, it's the support here, and resistance again yesterday. Okay? That's the beauty of volume profile. It just gives you what you need to know, right? I don't have to, I mean, don't get me wrong. Can I see that? My eyes, yes, but I like to know, ooh, low volume, no. Oh, let's check it out. All right? Now, look, swing high, swing high, swing high, right? And now we're making swing high, we're making lower highs, right? Now, we really got to see what it transpires here. You do have nice demand that formed here. Now, the same thing. We hit the week-to-day anchored VWAP and last week's lows, and we sold off. We came into this supply zone, which is a stronger supply. It's a 6 to 8 to 12-hour supply zone, and got a nice wick. This is from the momentary bullish news that we got. Okay? That makes sense. All right? If we take this low out, that could be very troublesome for the market and NASDAQ, okay? We don't have a supply until about 248 down here. Okay? There's a little pocket of volume here that we could take out. So you want to hold that level, let's just call it what it is, around 25045. All right? All right, just say 250s. Hold 250s, we have a chance at the Santa Claus. Remember, NASDAQ 100 is basically tech. It is tech. All right? Now, drop it down to a 1 hour. Okay? Here's our 1 hour. You zoom in a little bit, right? We have a bunch of stacked demand zones here. You can see we swept this liquidity here. Whoop. Closed inside the range. Broke this structure here. Kind of made another demand here, right? And then came all the way up to this supply and had selling, right? All good. Does this become the swing low? I don't know. Does this become a swing low? I don't know. See how we just came right into demand and got bought up? Right? Now we know we took some liquidity out here. Now the next move is that support, that supply zone right there. So your next level of equal highs is that 25434s. 25434s. Okay? So that's, I would say, a little mini bull bear line there, 25434s. Below this swing low is, the 25072s. Remember this high volume composite node down here? You don't want to lose that. That is definitely weak. That is definitely bearish. Okay? Because if you look at it, what do we have going here, right? We have a trend, right? Pretty much trend, right? Lower highs, lower highs, lower highs. Okay? That's what we have going here. Okay? So really what you want to see, like I said, this little mini bull bear line, even if you come in here, right? And let's say we do this, we do this, we do this, we do this, and then that's a swing low. You want to take this supply out and create another move. That way you can really start cooking. Your next move is this supply, take that out. Now there's poor structure here, and we can really move up back to ultimate balance. Okay? You got to get over this. Then you have not the best structure and not the best structure, which this can really start to cook. All right? That's your NASDAQ hourly charts. All right, that's your NASDAQ hourly charts. We're going to finish this off with the market profile, volume profile. Okay, here's the charts. All right, let's look at it together. I just explained it in pretty big detail on an hourly and a 4 hour. All right, hopefully that all makes sense to you. Now, there's yesterday's lows, right? Last week's lows as well. ES is currently right at yesterday's lows. All right, so we know there's a lot of stacked demand here. All right, this is our gauge. This is our gauge with this high volume composite node around the 6830s. You got to hold this for the bulls to have a shot. stacked demand zones, unfilled gap. Okay? To me, I think shorts shot their shot. But I don't know until the market opens. Okay? I don't know. But we are back inside last week's range, and this really could take off. Okay? So, most traded price of the overnight's right here. So you have a lot of congestion in this area. Okay? So for me, all right, this area is ultimate balance, right? We need to get over that for me to have confidence. Okay? Now you have this confluence side of 69.32s, which happens to be yesterday's highs. That's a level you need to get over. Then you have poor structure above us, and then I think you're going to move higher. Okay? Let's see what we do here. I think this is setting up for a bear trap. Okay, now below us, remember what I said here. You lose this. See this pocket in volume here? That means there's not a lot of trading holding this back from going lower. That's why I'm saying this has to hold. Right? Now the market is rolling over. I want to see tech catch a bit today. That's what I want to see. All right, let's get into scenarios. Okay. Now, I want a discount, folks. Last week's lows, we're right at yesterday's lows. A lot of confluence there. All right, now, market open. Let me break this out for you. Hold on. All right, there we go. Nice wick there with that NFP unemployment, right? Now, come to Papa here. All right, so what I want, all this stack demand, I wouldn't mind the pullback into anywhere here. Anywhere here. Okay? So let's just say anywhere in here. All I want to see is a whoop. I want to see a lower high. Okay? And I want to see tech not that weak or tech strong. Okay? Then now this is liquidity for us to take out. People who shorted and took profits, these new shorts, we want to take care of those and go all the way up to ultimate balance. This could be a nice trade in itself. Now, if you take out those overnight highs, this might not be the easiest, right? But it could be easy just because of the sheer gravity of the move lower, and we could just start ripping. And then your destination is this 69.32s. That is key. That's an overnight high and yesterday's highs. Okay? You break that, there is not much holding back to go higher. I'm not saying we do that all today. I'm just saying that's the structure. Now, bear trap even more. This is what I would think. Okay? Let's say we come down, push, and do this. This has to happen fast in order for me to be interested. You break lower. You recover. You put a lower high in. And let's say tech is not it's not very weak, or internals aren't that very weak. That's a long. Target ultimate balance. All right, that's my longs. Shorts. Okay. Shorts. All right, couple things here. I'm not loving it, to be honest with you. Not loving it. A lot of stack demand here, right? The one thing that you could see is, and I'm not loving this, we could push up into this. The supply's already been taken, but ultimate balance is here. There might be a scalp during the market open that might make me interested, but right now I'm not really interested. I'm not excited about it, put it that way. All this demand here, I know we just swept this. I'm just not a fan of it right now. Right? I could have a scalp that I don't know about right now. Okay? So think that's all I'm going to talk about there because, like I said, if this does happen, let's say, right, and you make this move and you cut through this, oh boy, it could really roll. I don't know if that happens though, right? If tech gets another weak day, it could. I don't know. I mean, it could. Okay. All right. Brings us to the Nasdaq, and we'll wrap it up here. Nasdaq does not have, remember, a demand zone all the way down to here, 24820s. So we need to hold this overnight lows. We really need to hold it. Okay. Now let's go over some levels here. Okay. We have a main supply zone right there. Let's call it at the 2452s. You want to break that. Price is here. We're a little gapping down a little bit lower than yesterday's low. Okay, most traded price of the overnight is right here. Okay, that's about 25247s. All right, we have stacked demands here. Remember, I went a high volume composite node here. That's that box. I know it's a high volume area from the past. We have two stacked demand zones. One of them being a major one, 6, 8 hour, or 12 hour. Okay. This sets up for a bear trap. Really does. Okay. Now here is the gap fill. That's yesterday's lows. I'm just going to put it there. There's last week's lows. We know we have a key supply zone. We know we have this confluence high at 2567s. Okay. That is, we break that, you go back up to ultimate balance. Okay. Now, below this low is bear. Woo. Text week, or more market week, and you break this level, the overnight lows, 25073s, and you keep going, nothing's holding this back. Nothing's holding this back to down there. Okay? All right, let's break it out and get into it. Let's break it out and get into it. Let's do it. All right. See, I'm going to show you this real quick. We came right to the week-to-date anchored VWAP, right to last week's lows, and got sold. That's not a coincidence. People are going to take profits there. I would take profits there. Okay. Now, let's go into scenarios. Scenarios. Okay, here we go. We're going to start with the bull because I like that right now. Okay. You got the sweep here. You got a low here. All right. I just want to see this demand hold. It's already holding here. It's already holding. Okay. Now, I want a discount. Why? Because I want to break that supply. I want to aim for this equal high of 254.50s. That's my destination, but I want a discount, right? So give me that discount. Pull back into somewhere into these demand zones. Okay. Find the bottom. Put a higher low in. Now we want to go for this overnight highs. That's today's most traded price. Let's go right there. I think you at least get that move. Now, if you take out this supply and pull back and you start holding, you're going up. Now you have single prints here from yesterday. You can go right up and tap this high, and that's another destination. Your 25670s, and then ultimate bounce. I don't say that happens all in today. Okay, I know we have CPI tomorrow. Now, I'm even interested in the bear trap. We come down here, whoop, go right under, recover. It's got to be quick, people. All right, put a higher low in, and that's also the move. Okay. Like I said, I really want to see how tech responds today. It's been down multiple days. Is it going to catch a bid today? I don't know. All right, now, that's the longs. Short side. Okay. Like I said, this supply zone is still active for the Nasdaq. So the Nasdaq still didn't break its supply like the ES did. So what do I want to see? All right, come down, push up into this supply. Maybe break overnight highs. Maybe hit the most traded price of yesterday. But let's say that rejects. You get a lower high. Well, now I know all this liquidity, these longs, I want to take them out. We start to push down. Now remember, I'm not a fan of the shorts as much because you have this stacked demand. Now a weak market just rips through demand zones. That's market generating information. If we take out this low, remember, very key, high volume node, and we hold, and we can't, and we try one more time and fail, we can go all the way down to the 248s. That's really all I'm interested in. However, if tech is not weak today, I'd rather be long. Okay, that's it for me. That's it for me today for my analysis. All right. Hopefully you enjoyed that. All right. Smash the like button if you did. That would mean a lot to me. All right. Now every morning I do this, and I hope you join me. All right. Give you the market story, market news, economic calendar, leaders and laggards, the general story. The markets give you technical analysis, and it also just gave you the long and short trade scenarios in NASDAQ and ES futures. All right. If you want more in-depth coverage, you're going to join my Discord. That's Confluence Trading. Go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. All right. Let me be your indicator. I should be going live today, so please come join me. All right. Now, also, you get that free indicator, the weekly expected move. It shows the upper and lower portions of the range that's expected via the options market. I run this via Python script every Monday morning, and I share it for free. It goes on your Thinkorswim chart. It can go on your phone as well. All right. So go ahead and do that. Now, if I don't see you in my room, I'll see you guys tomorrow morning. All right. This should be a very interesting day, and let's see what transpires.